Equity Management Academy. October 6, 2021. Gold. Prepare for a 20% rally, from the annual lows into Q1, 2022. Summary. This morning, the government announced that unemployment less than a gold market is showing a lot of buying action. The market is ready to move up again, but it may move down to test $1,765 again. We are probably going to make the annual low over the next few weeks. Fundamentals. This morning, the government announced that unemployment claims finally fell after a month, but 4.2 million Americans are still receiving benefits. The labor market appears to be struggling more than expected. About 10 people for benefits this week, about 38,000 previous week. Expected about 305,000 claims. About 2 million Americans are unemployed compared before the pandemic. Gold. CEO of the Management Academy, MontesDeOca, said this news. A little bit of a sell-off in precious metals. Gold came down to all daily by one level 1,701, but reverted, activating a bullish momentum. According to the Artificial Intelligence and Variable Changing Momentum Indicator, VCPMI, the target $1,770. The market is showing action. The market version back means that MontesDeOca's market cyclically discounted the fundamentals. He argues that rates will be bullish for precious metals. Raise for most instruments that are but will be that type as rates rise, will be less borrowing and leveraging market. Precious metals in an inverted market last year, he said, but hit $2,089, discounting the damage the pandemic caused. The market then declined back down to level support around $600. The 60.8% Fibonacci rate retracement revid up again. The market is matching the Fibonacci wave, beginning of a wave. The market at $10,000 again. However, the VPI picks the market more liquid again. When it came down weekly after reached eight buyers, this area of supply daily data. For the gold report with closing low 1,085, the trend's bear above $1,700 will make momentum neutral. Fleet price momentum of $1,772 was also bearish. A close $1,770 off negate bearish neutral. On downside, the monthly targets are the buy low of $1,700 and $1,100 fixed for the. If we trade through $1,772, targets the sell level of $1,823, $1,800. For the weekly gold report, the week trend momentum of $1,183 is bearish, while weekly price momentum $1,749 is bullish. So a bullish price momentum within our bearish trend last week. So $1,070 sellers and $1,790 are the weekly targets for this week, which is where you want to lock in your profit. With the revised economic news that came out, MontesDeOca is just icing the top of technical indicators. Fundamentals appear to move with gold as we move into the third and fourth quarter of this year. We probably won't make gold in the next. Any opportunity in the market comes down, add to your positions. We are about to complete cycle and start a new 360-day cycle process. The VCPMI for 20% rally over the next 2 quarters. Bitcoin is at 5,000. October 1st, we recommend to go long by one level of 40,325, which is the first level of support using vendor analysis. This was an area where the VCPMI went long. The market then back up and reached a weekly sell level, which were targets of 51,245 and 53,000.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodity?
Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room. I wanted to share with you this report. Bear with me 1 second. I want to come back to the charts. We're back, and I wanted to share the report that we published basically in the Associated Press for the benefit of my subscribers in my private trading room as well as my audience here in this live presentation. One of the things that I would like to do here is to talk about the different levels, you might say, or dimensions that we use or the algorithm identifies for us to, as self-directed traders, take advantage of these markets. And the VCPMI identifies a very specific structure. As you can see, it's a structure that uses 5 pivot points, 5 different levels, but it does not use more than 5. The structure is a limited 5 perfect Fibonacci number. Within that structure, it identifies the mathematical probabilities of the extreme levels above or below the average price. And you can use this as a GPS to trade, to day trade, to position trade, or to swing trade. It is like a GPS that guides you through the different levels that essentially show the extreme trading levels of the supply and demand above or below the mean, above or below the average price. So what we do is we identify the average price for the day, week, or month. And we trade primarily the daily against the weekly. And so what you see here is basically the daily charts, the daily data that I use for day trading, and the weekly data on the right of the chart. And what the methodology does basically is it identifies the price relationship into these different levels. By trading below the average, it's bearish. Momentum, it's a bearish trend. The average identifies the trend, whether it's a daily, weekly, or monthly. Excuse me. And for you as a trader, self-directed trader, it's important to identify the trend that you're trading, whether it's a short-term trend, intermediate, or long-term trend. And so what we do with the average price is basically identify the trend momentum daily and weekly. And when the price is trading below the average is bearish, above is bullish. Now, this is the acceleration of the momentum expected from the average price. And as you can see on Friday, once it traded above the average price, it accelerated to the targets above. And what the algorithm does to these pivot points is it identifies them in color, in red. And when you identify this in red, it identifies for us the area of distribution of supply. Identifies this area as a high probability that the price could revert as it did here. And once it closes below these numbers, then you have a trigger point daily and weekly. Automatically, here the algorithm identifies a short trigger and the targets automatically are identified below. In this case, the average price. This is called the reversion to the mean principle, where the market reaches the extremities of supply and demand and activates a short trigger, and automatically the algorithm tells you your first target is the average price. When you get to the average price, you take your profit. In this case, it activated the bearish trend momentum, and you as a self-directed trader, obviously having this information can create a strategy according to your profile. And depending upon your skill as a trader, then you can use these indicators for you to position yourself accordingly. Not as much as what I'm doing, so bear with me 1 second. I'm having a couple of technical issues here. I think we can see the chart clearly. Okay. Sorry about that. Coming back here to the price, when it gets to the average price, it goes neutral, and then if it trades below, then it has a bearish trend momentum, and the targets below have been activated. This signal here was a short trigger, and we recommended our traders last week to cover any long positions and hedge or synthesize as this gave us a trigger point. Now, we don't know whether it's going to be this kind of momentum. All we know is that there is a 90%, 95% probability from here, from these levels here, that the market is going to revert. And this is a perfect example of reversion to the mean, coming back down to the mean. Completing the target, trading below the average price or the mean, activating a bearish trend momentum, and the target of 1746 is activated. Now, what you see here is the market coming down and identifying buyers at a higher level. reverting back up to the mean. So it's neutral to bearish, and we're waiting for the market to trade above the average of 1764, which will activate again the sell once to levels of 1775, 1778, or come down to the blue levels now that represent the accumulation of supply. Ideally, we would like to see this market come down to the 1725 levels, which represent a bottom in the market here, because we are making the last, I would say, the last push to bring prices down for the completion of the annual bottom, the annual low. Let's take a look at Bitcoin using the same principles. And what we see here is Bitcoin is up almost 5%, and it has completed the target, the daily targets of 56,082 and 57,438. And